If you're getting ready to sit for the Kentucky Property and Casualty Insurance Licensing exam, you're in the right place. This video covers only what Kentucky does differently, the state's own laws, numbers, and rules that show up on the state portion of your exam. It assumes you're studying the national material somewhere else, the general concepts that are the same in every state. We're not going to repeat that here. What we're going to do is walk through the Kentucky-specific rules, one at a time, in plain language, and point out exactly where the exam likes to set its traps. By the end, the numbers that matter will be numbers you own. Let's start with who runs the show. Every insurance question on your exam traces back to one agency, the Kentucky Department of Insurance. The department regulates the whole insurance market in the Commonwealth. It licenses producers like you, it reviews policy forms and rates, it investigates complaints, and it watches the financial health of the companies doing business in the state. At the head of the department sits the Commissioner of Insurance, and when the exam refers to the Commissioner, this is the person it means. Nearly all of the law you'll be tested on lives in one place. Chapter 304 of the Kentucky Revised Statutes, the Kentucky Insurance Code. You don't need to memorize section numbers for the exam, but you should recognize that when a Kentucky law question appears, it's almost always drawn from Chapter 304. That single fact helps you spot a state law question the moment you see it. Here's one number worth holding on to. The department examines the financial condition of Kentucky's domestic insurers, the companies based in Kentucky, at least once every 5 years. We'll say that again because it's a favorite. At least once every 5 years. If a company runs into serious financial trouble, the department has the power to step in, ask a court to take over the company, and either rehabilitate it or wind it down and pay out what's owed. Keep that idea in your back pocket, because near the end, we'll come back to what happens to policyholders when a company actually fails. On your exam, if you're asked who has authority over insurance producers and companies in Kentucky, the answer is the Department of Insurance, acting through the Commissioner. Not the Attorney General, not a federal agency, the department. That's the foundation. Now, let's get you licensed. Click the link below and download today. Before you can sit for the Kentucky exam, the state wants you prepared, and it defines prepared with a number. Kentucky requires 20 hours of prelicensing education for each line of authority you're seeking. Property is one line, casualty is another. So, if you're going after both, the full property and casualty license most producers want, you're looking at 20 hours for property and 20 hours for casualty, 40 hours in total. That per-line structure is the detail to remember. It's 20 hours per line, not 20 hours for the whole thing. You'll also complete a criminal background check through the Kentucky court system before you're licensed, and you'll file your license application through the National Producer Registry that Kentucky uses for resident licensing. Once the department processes that application, you schedule your exam through your online account with the department. Kentucky also has something called a temporary license, and this is a spot where test takers guess wrong, so let's be precise. A Kentucky temporary agent license is not a start selling while you finish your exam permit. It exists to keep an existing insurance business running in specific situations. For example, when a licensed agent dies or becomes disabled, and a surviving spouse or representative needs to service the book of business, or when an agent's designee steps in while the agent is on active military duty. In those cases, the Commissioner can issue a temporary license for a period not to exceed 180 days, without requiring the exam or prelicensing course. So the number is 180 days, and the purpose is servicing continuity, not skipping the exam. On your exam, if an answer choice describes the temporary license as a way for a brand new producer to sell before passing, be suspicious. That's the trap. Let's recap this section, because the first number is a classic setup. Prelicensing in Kentucky is 20 hours per line of authority. Property and casualty together means 40 hours. And the temporary license runs up to 180 days for business continuity situations. If an answer choice tells you 20 hours covers both lines at once, walk past it. Next, we'll cover what keeps that license alive year after year: continuing education. Once you're licensed, Kentucky doesn't just let you coast. To keep your license, you complete continuing education, ongoing coursework that keeps producers current, and the number to lock in is 24 hours. Every producer completes 24 hours of continuing education per compliance period. Within those 24 hours, at least 3 must be ethics. So the pair you memorize is 24 and 3. 24 total, 3 of them ethics. Now, Kentucky's compliance period is where a lot of test takers stumble because it isn't a flat calendar year for everyone. Your continuing education runs on a 2-year cycle called a biennium, and that biennium ends on the last day of your birth month. Whether it lands in an odd-numbered or even-numbered year depends on the year you were born. The takeaway for the exam: Kentucky ties your deadline to your birth month, not to a single statewide date. That personal deadline design is the Kentucky-specific wrinkle. 2 more features soften the edges of that rule, and both get tested. First, carryover. If you complete more than the required hours in a period, Kentucky lets you carry up to 12 extra hours forward into the next period as general credit. So 12 is your carryover ceiling. Second, the safety net if you fall short. If your license lapses because you didn't finish your hours, you have up to 1 year from that termination to complete the missing hours and get reinstated without having to take the exam again. 1 year, no re-exam. That's the relief valve, and it's a comforting one to know is there. Let's recap the numbers that matter here, because they cluster together, and the exam mixes them up on purpose. Continuing education is 24 hours, with at least 3 hours of ethics. Carryover is capped at 12 hours. And the reinstatement window after a lapse is 1 year. Mix up 24, 3, 12, and 1, and you'll lose easy points, so keep them in their lanes. With your license earned and maintained, we can turn to the heart of Kentucky property and casualty law, and the single most heavily tested Kentucky topic on your exam: the state's no-fault auto system. If you remember one body of law from this entire video, make it this one. Kentucky's automobile insurance runs on a no-fault system created by a law called the Motor Vehicle Reparations Act. No fault means that after a crash, your own insurer pays certain of your losses right away, regardless of who caused the accident. You don't wait for anyone to be proven at fault before those first benefits are paid. Most of the national material treats fault-based liability as the default, so this is a genuine Kentucky difference, and the exam leans on it hard. The benefits the system pays are called basic reparation benefits. You'll also hear them called personal injury protection, or PIP. Same thing, different label, and the exam uses the terms interchangeably. So treat basic reparation benefits and PIP as one idea. Here is the number that anchors the whole topic. Basic reparation benefits pay up to $10,000 per person, per accident. Say it with us, $10,000 per person. That figure is the spine of half the auto questions you'll see. What does that $10,000 actually cover? Economic losses from a motor vehicle injury, reasonable medical expenses, lost wages from being unable to work, the cost of replacement services when you can't perform tasks you normally would around the home, and, if the injury causes death, survivor's benefits. Within that same $10,000, up to $1,000 can go toward funeral expenses. Notice what's missing from that list: pain and suffering. Basic reparation. Benefits pay economic, out-of-pocket losses. They do not pay for pain and suffering. That distinction sets up the next section, so hold it. And because it's payable regardless of fault, the system covers you even when the crash was your own doing. and it covers pedestrians struck by a covered vehicle. Picture this. You're rear-ended at a stoplight and run up $6,000 in medical bills. Whose insurer pays those first? Under Kentucky no fault, your own basic reparation benefits coverage pays up to that $10,000 cap, without anyone first proving the other driver was at fault. That's the whole point of the system. Prompt payment, fault sorted out later. One more framing detail the exam likes. Kentucky is what's called a choice no-fault state, one of only 3 in the country, alongside New Jersey and Pennsylvania. Choice means drivers can opt out of the no-fault limitations if they take a specific step, and that step is the subject of our next section. Let's recap before we move on. Kentucky's no-fault law is the Motor Vehicle Reparations Act. The benefits are basic reparation benefits, also called PIP. They pay up to $10,000 per person per accident for economic losses only, medical, wage loss, replacement services, survivor's benefits, and up to $1,000 of that for funeral costs, and they pay regardless of fault. Pain and suffering is not part of it. Lock in $10,000 and lock in regardless of fault. That $10,000 floor leads straight to the question the exam loves most. When can an injured person step outside no fault and actually sue for pain and suffering? That's the tort threshold, and it's next. So, when can an injured driver step outside the no-fault system and sue the at-fault driver for pain and suffering? Kentucky answers that with what's called a tort threshold, a bar the injury has to clear before a lawsuit for those non-economic damages is allowed. Tort, by the way, just means a civil wrong you can sue over. Under the no-fault system, your right to sue for pain and suffering is limited until you meet one of the thresholds, and there are 2 ways to meet them. The first is a dollar threshold, medical expenses of more than $1,000. Cross $1,000 in medical bills, and the door to a pain and suffering claim opens. That's the number to memorize, $1,000 in medical expense. The second way is by type of injury, no dollar figure required. If the injury involves permanent disfigurement, a bone fracture, permanent injury, or death, the threshold is met regardless of the medical bill total. So the full list is more than $1,000 in medical expenses, or permanent disfigurement, a fracture, permanent injury, or death. Here's a scenario the exam might build. A driver is injured, runs up $700 in medical bills, no broken bones, no permanent injury. Can that driver sue the other party for pain and suffering? No. $700 is under the $1,000 threshold, and none of the injury types are met. So the claim for pain and suffering is barred, and the losses stay inside no fault. Bump those bills to $200 or add a fractured wrist, and the answer flips to yes. Now the choice part we promised. Kentucky lets a person reject the no-fault limitations entirely, but there's a strict way it has to be done. The rejection must be in writing, on a specific form, and filed with the Department of Insurance before it takes effect. Someone who rejects no fault keeps full tort rights from the first dollar, the right to sue and be sued without the threshold, but gives up those automatic basic reparation benefits unless they buy the coverage back. On your exam, remember 2 things about rejection. It has to be in writing and filed with the department, and it's a trade, full tort rights in exchange for giving up guaranteed no-fault benefits. There's also a wrinkle worth knowing for motorcycles, and we'll cover it fully in the next section, but here's the tie-in. Because motorcyclists are treated differently under no fault, the rejection rules interact with motorcycle coverage in ways the exam likes to probe. Quick recap. The tort threshold is more than $1,000 in medical expenses, or permanent disfigurement, a fracture, permanent injury, or death. And a driver can reject the no-fault limitation only by a written rejection filed with the Department of Insurance. Keep $1,000 firmly separate from the $10,000 PIP cap. The exam will put both numbers in the same question, hoping you swap them. Next, the coverage every Kentucky driver is required to carry and the exact minimum limits. Kentucky requires every registered motor vehicle to carry insurance, and it sets a floor on how much liability coverage you must have. Liability coverage pays for the injuries and property damage you cause to others. The Kentucky minimums are $25,000 for bodily injury to any one person, $50,000 for all bodily injury in a single accident, and $25,000 for property damage. You'll hear that shorthand as 25-50-25. Say it once more, 25-50-25. Watch this one closely because it's a favorite trap. Older study materials and outdated websites still list the property damage minimum as $10,000. In Kentucky, that figure is $25,000. If you see $10,000 as the property damage minimum in an answer choice, that's the wrong answer put there to catch anyone studying from a stale source. The property damage minimum is $25,000. Kentucky allows one alternative to the split limits. Instead of 25-50-25, a driver can satisfy the requirement with a single combined limit of $60,000 covering bodily injury and property damage together. So there are two acceptable ways to meet the requirement: the 25-50-25 split or a $60,000 single limit. And on top of liability, remember from our no-fault discussion that the vehicle must also carry basic reparation benefits, that PIP coverage, with one exception we're about to cover. That exception is motorcycles. Basic reparation benefits are required on motor vehicles generally, but not automatically on motorcycles. A motorcyclist is not entitled to no-fault benefits for a motorcycle injury unless that PIP coverage was purchased. Insurers must offer it, but the rider chooses whether to take it. So the rule to hold is, PIP is mandatory on ordinary vehicles, optional on motorcycles. What happens if a driver simply doesn't carry the required insurance? Kentucky treats that seriously. Driving without the mandatory coverage can bring a fine in the range of $500 to $1,000, up to 90 days in jail, or both, and it puts the vehicle's registration at risk. One more practical detail the exam sometimes reaches for: to satisfy the mandatory auto requirement for registration, the coverage has to come from an insurer authorized to do business in Kentucky. Surplus lines coverage, coverage placed with an insurer not licensed in the state, is not accepted to meet the auto registration requirement. Let's recap the numbers, because this is dense and every figure is testable. The minimum limits are 25-50-25, $25,000 per person for bodily injury, $50,000 per accident, $25,000 for property damage, or a $60,000 single limit. Property damage is $25,000, not $10,000. PIP is required except on motorcycles, and driving uninsured risks a fine of $500 to $1,000 and up to 90 days. Lock those in. That covers what you must carry for others. Next, coverage that protects you when the other driver has nothing. Picture a crash where the driver who hit you carries no insurance at all, or carries so little that it doesn't come close to covering your injuries. That's what uninsured and underinsured motorist coverage is for, and Kentucky has specific rules about how the two are offered. Rules the exam likes because the two coverages are handled differently. Start with uninsured motorist coverage, often shortened to UM. It pays your damages when the at-fault driver has no insurance. In Kentucky, every auto policy must include uninsured motorist coverage, unless the policyholder rejects it in writing. Think of UM as opt-out. It's in the policy by default, at limits that match the bodily injury minimums, and the only way to be without it is an affirmative written rejection. That written rejection requirement is the tested detail. A spoken "no thanks" doesn't do it. It has to be in writing. Underinsured motorist coverage, shortened to UIM, works the other direction. It fills the gap when the at-fault driver has some insurance, but not enough. Here, Kentucky treats it as opt-in rather than opt-out. The insurer must make underinsured motorist coverage available, but it's provided on the policyholder's request rather than included automatically. So hold the contrast clearly. UM is included unless rejected in writing. UIM is offered and added when requested. Here's how to keep them straight on your exam. Uninsured means the other driver had nothing. Underinsured means the other driver had something, just not enough. UM is opt-out with a written rejection. UIM is opt-in on request. If a question describes a driver who was hit by someone with no coverage whatsoever, that's uninsured motorist. If the other driver had a small policy that ran out before your bills did, that's underinsured motorist. Recapping this section, UM must be included in every policy unless rejected in writing. UIM must be made available and is added on request. Uninsured is no coverage. Underinsured is not enough coverage. Keep the written rejection rule attached to UM. Now, what about a person who's entitled to no-fault benefits but has no policy to collect them from? Kentucky has a safety net for exactly that, and it's next. There's a gap the no-fault system has to account for. Suppose someone is entitled to basic reparation benefits. They were injured in a motor vehicle accident, but there's no insurance available to pay them. Maybe they were a pedestrian struck by an unidentified hit-and-run driver, and there's no vehicle policy to turn to. Kentucky's answer is the Kentucky Assigned Claims Plan, and it functions as the payer of last resort for basic no-fault benefits. Here's how it fits together. When you're injured, you normally claim basic reparation benefits from the insurer of the vehicle you were in or the vehicle that struck you if you were a pedestrian. If there's no coverage on that vehicle, you look to your own policy or a policy in your household. Only when none of those sources exists does the claim go to the Assigned Claims Plan, which assigns it to a participating insurer to handle. The important word is last. The plan is where a legitimate no-fault claim lands when every ordinary source has been exhausted. But there's a limit the exam likes to test, and it ties back to something we said earlier. A person who was required to carry insurance and didn't, an uninsured owner driving their own uninsured car, is not entitled to collect basic no-fault benefits from any source, including the Assigned Claims Plan. The plan is a safety net for people who fall through no fault of their own, not a rescue for someone who ignored the mandatory insurance law. So picture two claimants, an innocent pedestrian with no available coverage who can turn to the plan, and an uninsured owner injured in their own uninsured vehicle who cannot. That contrast is exactly the kind of distinction that shows up in a scenario question. Recap. The Kentucky Assigned Claims Plan pays basic no-fault benefits when no other coverage is available, as a last resort, but an owner who failed to carry required insurance can't collect from it. Now, let's move from claims coverage to how policies end, because Kentucky sets careful rules on that. A policy can come to an end in more than one way, and Kentucky sets different clocks for each, with different numbers for auto than for other property and casualty lines. Getting these timeframes straight is worth several exam points, so let's separate them carefully. First, the vocabulary. Cancellation means the insurer ends the policy in the middle of its term. Non-renewal means the insurer lets the policy run to the end of its term and then declines to offer another one. Those are different actions with different notice periods. Take auto first. When an insurer cancels an auto policy mid-term, it must give the insured at least 20 days' notice before the cancellation takes effect. There's a shorter clock for one specific reason. If the cancellation is for non-payment of premium, the required notice drops to 14 days. And when an insurer decides not to renew an auto policy at the end of its term, it must give 75 days' notice of that non-renewal. So for auto, hold three numbers: 20 days to cancel, 14 days for non-payment, 75 days for non-renewal. There's also a protection built into the auto rules. After a policy has been in effect for 60 days, the insurer can't cancel it mid-term for just any reason. Cancellation is limited to a specific set of grounds, things like non-payment, fraud, or material misrepresentation, a suspended driver's license, or a substantial increase in the risk. The idea is that once you're past that initial 60-day window, your coverage is more secure and can't be dropped on a whim. Now, the other property and casualty lines, think homeowners and similar coverage. Here, the cancellation clock is longer. For a policy that has been in force more than 60 days, the insurer must give 75 days' notice to cancel. Non-renewal is also 75 days. And Kentucky adds one more 75-day trigger that surprises people. If the insurer wants to raise your renewal premium by more than 25% for the same coverage and risk, it owes you 75 days' notice of that increase. So for these lines, 75 days is the number that recurs, cancellation after 60 days, non-renewal, and a premium jump over 25% all run on that 75-day clock. Let me flag the contrast directly, because it's the trap. For auto, midterm cancellation notice is 20 days. For other property and casualty lines, cancellation of an established policy is 75 days. Same word, cancellation, two different numbers depending on the line. If a homeowner's question hands you 20 days, that's the auto number sitting in the wrong place. One more consumer protection to know across these rules. When an insurer cancels or refuses to renew, the notice has to state the actual reason, and the insured generally has the right to ask the commissioner to review whether the insurer had adequate grounds. That request runs on a short clock, within 7 days of the notice. Recapping the numbers, and there are several, so slow down here. Auto, 20 days to cancel, 14 for non-payment, 75 for non-renewal. Other property and casualty, 75 days to cancel a policy in force over 60 days, 75 for non-renewal, 75 for a premium increase above 25%, and 7 days for the insured to request commissioner review. Keep the auto 20 and the other lines 75 from blurring together. Once a claim is filed, Kentucky puts the insurer on its own set of clocks. That's next. Once a claim comes in, Kentucky doesn't let an insurer sit on it, and the rules that govern claim handling are grouped under what's called unfair claims settlement practices. These are the behaviors the law forbids when a company handles a claim, and the specific time limits attached to them are prime exam material because they're concrete numbers. Start with acknowledgement. When an insurer receives notice of a claim, it must acknowledge that it received the claim within 15 days. It doesn't have to pay in 15 days. It has to respond, to let the claimant know the claim landed. That same 15-day clock applies to other pertinent communications. When a claimant sends something that reasonably calls for a reply, the insurer owes a response within 15 days. And if the Department of Insurance itself sends the insurer an inquiry about a claim, the insurer again has 15 days to respond. So 15 days is your acknowledgement and communication number, and it shows up in 3 places. Next, the coverage decision. After the insurer receives a proper proof of loss, the claimant's documentation of what happened and what's owed, it must affirm or deny coverage within a reasonable time, and Kentucky's standard sets that at 30 days after receiving the proof of loss. So the pattern is 15 days to acknowledge, 30 days to accept or deny once proof is in hand. And if the insurer needs more time to investigate and can't decide within that window, it can't simply go silent. It must keep the claimant updated, sending a status explanation and then continuing to update roughly every 45 days while the claim stays open. 15, 30, 45, acknowledge, decide, keep updating. Beyond the clocks, the law lists conduct that's flatly prohibited. An insurer may not misrepresent the policy's provisions or the facts relating to a claim. It may not fail to adopt reasonable standards for promptly investigating claims. It may not refuse to pay a claim without conducting a reasonable investigation. And it may not force a claimant to sue by offering far less than what's ultimately owed. Picture an adjuster who denies a claim outright without ever looking into the facts. Is that allowed? No. Refusing to pay without a reasonable investigation is a named unfair claims settlement practice, and the exam expects you to recognize it as prohibited. Recap. Acknowledge a claim within 15 days, affirm or deny within 30 days of proof of loss, and update roughly every 45 days while a claim stays open. And know that misrepresenting policy terms, failing to investigate, and refusing to pay without investigating are all prohibited practices. Now, back to a promise we made at the very beginning. At the start, we said we'd return to what happens when an insurance company actually fails, and here we are. When a property and casualty insurer becomes insolvent, unable to pay what it owes, Kentucky has a backstop, so policyholders and claimants aren't simply left with nothing. It's called the Kentucky Insurance Guaranty Association, and every property and casualty insurer licensed in the state belongs to it. When a member company goes under, the association steps in to pay covered claims that the failed insurer can no longer pay. The number to know is the cap. The association covers a covered claim up to $300,000. That's the ceiling on what it will pay on a claim when a member insurer fails, $300,000. Say it again, because it's the figure the exam wants, $300,000. There's one important exception, and it's a clean exam point. Workers' compensation claims are treated differently. For workers' compensation benefits, there is no dollar cap. The association pays those benefits in full according to the workers' compensation law, rather than stopping at $300,000. So the rule pairs neatly, $300,000 on covered property and casualty claims generally, but no cap on workers' compensation. If a question asks about the limit on a workers' comp claim through the Guaranty Association, the answer isn't a number, it's no cap. One thing to keep straight, this association is the property and casualty backstop. The life and health side of the industry has its own separate guarantee association with its own limits, so don't carry a life insurance number into a property and casualty question. For your exam, the property and casualty figure is $300,000, workers' compensation accepted. Recap: the Kentucky Insurance Guaranty Association pays covered claims up to $300,000 when a property and casualty insurer fails, with no cap on workers' compensation. That's your insolvency safety net. We've covered the law. Let's finish where your exam day actually happens. Let's talk about test day itself, because knowing the format takes a layer of nerves off. The Kentucky Property and Casualty Licensing Exam is administered by the Department of Insurance, and it's delivered in person at the department's testing sites around the state. Kentucky does not offer remote at-home testing for this exam, so plan to go to a site. Here's the shape of the test. You'll face 150 scored questions, and you'll have 190 minutes to complete them. That's a little over 3 hours for 150 questions, which is a comfortable pace if you've studied. More than a minute per question. The questions are multiple choice, and they combine the national content you're studying separately with the Kentucky-specific material we've covered here. To pass, you need to answer 70% of the questions correctly. So 70% is your target. Memorize that as the passing line. The fee to sit for the exam is $50. If you don't pass and need to retake it, the retake fee is again $50. And Kentucky lets you reschedule and try again quickly rather than making you wait weeks. Testing is by appointment. You schedule it through your account with the department after your application is processed, and there's a cancellation rule worth respecting. If you need to cancel or reschedule, do it at least 24 hours ahead, or you can forfeit that $50 fee. So, 24 hours is the cancellation window. On the day, bring valid government-issued photo identification and your certificate of completion from your pre-licensing course. Without acceptable identification and that certificate, you can be turned away and lose your appointment, so treat those two items as non-negotiable. The exam is taken on a computer, and it's scored when you finish, so you'll know where you stand right away. Quick recap of the logistics numbers: 150 questions, 190 minutes, 70% to pass, a $50 fee, and a 24-hour cancellation window. Bring photo ID and your certificate of completion. Now let's pull the whole video together. You've covered the Kentucky-specific material that the state portion of your exam is built on, so let's do one final sweep of the numbers that have to be automatic. The no-fault cap, basic reparation benefits, is $10,000 per person per accident, paid regardless of fault, for economic losses only. The tort threshold is more than $1,000 in medical expenses, or a fracture, permanent disfigurement, permanent injury, or death. The minimum auto liability limits are $25, $50, $25, with a $60,000 single limit alternative and property damage is $25,000, never $10,000. Prelicensing is 20 hours per line. Continuing education is 24 hours with 3 hours of ethics on a biennium that ends the last day of your birth month with 12 hours of carryover and a 1-year reinstatement window. Auto cancellation is 20 days, 14 for non-payment, and 75 for non-renewal, while other property and casualty lines run on 75 days. Claim acknowledgement is 15 days. Coverage decisions 30 days after proof of loss. The Guaranty Association covers up to $300,000 with no cap on workers' compensation. And on test day, 150 questions, 190 minutes, 70% to pass. If those numbers feel like a lot right now, that's normal. You're not expected to have them memorized on one pass. Come back to this video, quiz yourself on the recaps, and let the repetition do its work. Every one of these is a rule you can absolutely learn, and once they're locked in, the Kentucky portion of your exam turns into points you can count on. You've got this. If this video helped you get ready, take a second to like it and subscribe so we can keep making these for every state and every line. Now go pass that exam.